Understanding the property market is one of the keys to working out how to invest safely and effectively. For years we've been trying to perfect the science of forecasting property markets, because the difference between buying at the start of the boom and the end of the boom can mean the difference between getting 0 or 10% growth or almost 100% growth. A few years ago, we had lots of data available for us and we had plenty of graphs on all the different property markets. But what we didn't have at the time was a tool to compare two markets on the one graph. So we had that built. So this is the graphing tool we've got here. With this graphing tool, we can choose any property market in Australia, either houses or units, and a date range. And we compare two markets on the one graph so we can get a clearer understanding of how those two markets behave compared to each other. So at the moment we've got Sydney modelled in red and Brisbane modelled in blue. And then the black line below is the relative price difference. So when the black line is high, that means that Sydney is more expensive than Brisbane by the axis on the right hand side. So in this point, the previous high point, we had Sydney at 125% more expensive than Brisbane. So you can see the relationship between the two graphs. So normally Sydney grows first relatively and the point is high, and then when we get a big price difference, Sydney normally slows and Brisbane starts to catch up. And while that's an interesting theory, it's really useful to see in practice how that cycle just keeps happening. And there is a reason for it. But we can see this is back until 1968. And we can see this cycle of price difference changing happening every about 10 to 15 years. So why does it happen? Well, Sydney was colonised first, so Sydney is relatively the most expensive market in Australia. And it's also the most internationally renowned market. So normally Sydney and also Melbourne attract most of the international migrants from overseas. And so usually Sydney and then Melbourne lead the property boom. But when Sydney starts to grow and has a boom, and usually has 70 to 120% growth in a boom, while the other markets aren't growing much, we get this big price difference. That price difference can't continue to get bigger, because eventually people are going to look at the price in Sydney versus the price in those more affordable markets like Brisbane and start to move to those more affordable markets. So if we can look at the most recent price difference between Sydney and Brisbane, we've got that huge gap again. And we got very close to the biggest price difference we'd ever had between Sydney and Brisbane. So Sydney was about 120% more expensive than Brisbane, more than double. So eventually the Sydney market starts to realise, well, the people in the market, that Sydney is near that glass ceiling, we sometimes call it, and affordability is strained. And then people start to look for markets where they can buy and they can invest, or where they could move to. And when they start to look around at places like Brisbane that are less than half the price, that's a big incentive for people to consider moving. And we start to get a high rate of interstate migration when the price difference is big. And we get up to normally about 1,000 people per week, 50-odd thousand a year, moving from the southern states, Sydney and Melbourne, the more expensive, to the more affordable. So there's people leaving Sydney and going to Brisbane. So Sydney slows, Brisbane grows. Now, of course, it takes a lot to encourage someone to move states. But it does happen up to 50,000 a year move. But the biggest driver, even more than that, is international migration. So when people have decided to leave their home country, for whatever reason that might be, and normally they're quite experienced, professional, educated people, often with a bit of money. Usually they qualify for the visa entry requirements more. When they're coming to Australia, it doesn't matter to them too much whether they go to Sydney or Brisbane or Melbourne until they see property prices. So when they see property prices, and when Sydney is so much more expensive than Brisbane, we just get a far bigger share of those international migrants going to the more affordable markets and help driving the prices up. So that's one of the key indicators we look for in predicting a property boom.